What's going on, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex, and today we're going to be going over our weekly watch list, which is mainly going to contain a lot of earning reports on these stocks. Very big earnings this week. We have a ton of big name blue chip companies. We got Tesla, Apple, AMD, Microsoft, Google, Facebook, Shopify, Boeing, my, PayPal, McDonald's, Spotify, Amazon. We have tons of big name companies, and in order to take advantage of this high period of volatility, there are some strategies that we can utilize on these stocks. We're not going to be going over every single stock, of course. We're going to be selecting a few, and then you can do similar strategies on your favorite ticker symbol stocks. So the first one we're going to be looking at is, of course, AMD. It has an incredible 5-year growth, up almost 1,500%, and it's in this phase of consolidation. It's looking for that next big breakout. Past year, it's up around 43%, but it's been hovering around this $80 to $90 price point for some time now, and it's looking pretty good. So if you're a big bull on AMD, you could just outright buy shares of the stock. Buying and holding AMD for long term is a pretty good strategy, especially how most of their products are beating Intel's products. So they're overtaking Intel in the semiconductor space. But if you think that AMD is a little bit high, or you just want to play options for a short term play, you could do like an August 20th cash secured put. So you could do something like if you think AMD is a good price to buy at $90, you could do a $90 cash secured put, receive $320 of premium for doing so. If AMD stays above $90, you're going to be making money, and if AMD goes below $90, you just buy the dip. You buy 800 shares at $90 each, and of course, you get paid to do so, $320 directly to your pockets. But the main reason for selling cash secured puts is because implied volatility is going to be higher than normal. And after earnings releases, implied volatility tends to get crushed because there's no more ambiguity and there's little decrease in volatility, which means the decrease in volatility is going to affect the premium as well. So if the stock stays flat, most of the premium is going to be crushed, which is going to be profitable if you're selling options. So AMD, it's a very good stock to sell cash gear puts on, but you do need $9,000 of collateral. So let's take a look at another stock a little bit cheaper, and we're going to be having Upwork, which has earnings on Thursday after the market closes. This one is going to be a little bit cheaper, better for those with a little smaller accounts, but it has a really good 5-year growth, and it's basically a company similar to Fiverr. So you can hire freelancers, or if you're a freelancer yourself, you can look for work. And it's really good in this time since a lot of people are quitting their jobs actually and looking for remote work. So they come over to websites such as Fiverr and Upwork, and we're going to be seeing a lot of customers on these platforms. So if you want to play Upwork, you could sell some cash secured puts. August 20th expiration date is fine enough. And we can do something like if you want to be safe, you could do a $45 cash secured put or a $50 cash secured put, which is $4 under the current stock price. This is something that I would do. So the strategy with this is this has a high implied volatility. So after they report earnings, the IV is going to get crushed, and as long as Upwork doesn't tank, Upwork, of course, can go down quite a bit before you start to lose money. But as long as Upwork doesn't tank, you're going to be making profit off of that IV crush. So that is one way to take advantage of it. But in the short term, that is how we're going to be playing Upwork. If you believe in this company in the long term, you could just outright buy 100 shares, and that would be a good strategy. Buying calls and buying puts is going to be very risky because of the implied volatility and the IV crush. So you want to sell options if you can. So Upwork is a very good company, and I can see a lot of growth in the long term. Of course, we have Apple as well, reporting earnings on Tuesday after the market closes. And this is similar to the other big tech companies: Apple, Microsoft, Google, Facebook, all of those companies, Amazon, Tesla. These are going to be higher priced stocks, so it's going to be a little bit harder to sell cash secured puts on. Amazon being a little bit one of the cheaper ones, you can do it if you have $15,000 in buying power. But the strategy we're going to be doing here is going to be it's going to be a put credit spread, which is a bullish neutral position, and it's also going to take advantage of the implied volatility crush after the earnings reports. So as long as Apple doesn't completely get killed, you're gonna be making money. Apple can go down a little bit as well, and you'll still make money. That's the beauty of selling options, selling cash secured puts as well as credit spreads. So something we could do is a 148 strike. We're going to be selling that, and then we could do a 147 strike as well. We're going to be buying that one. So we're going to be receiving a credit of $45. So what's the max profit going to be here? It's going to be $45, and we're putting down a collateral of $100. Because remember, the collateral is going to be the width of the strikes, which is 148 minus 147 multiplied by 100, because there's 100 shares in each contract, and it's going to be a collateral of $100. Max loss is going to be around $55. It's going to be the collateral minus the minimum credit we're receiving. So it's basically a way to almost double your money, assuming that Apple stays above $148 by August 20th. But the strategy we're going to be employing here is actually going to be we're going to be closing out our contracts the day after the report earnings, because of, as we mentioned earlier, the implied volatility crush. And most of the times you can just close out your contracts, your position, for a profit, assuming Apple doesn't completely get tanked. So that's going to be the strategy there. Of course, if you do like 100 contracts, if you have a bigger account, you can receive a credit of $4,500 and then put down collateral of $10,000, which is going to be a max loss of $5,500 if Apple gets killed and by August 20th it stays below your strike prices. So that is going to be one way to play Apple here. So for the last stock, it's going to be a safer one. It's going to be a dividend stock. A lot of you have been requesting some more dividend picks, and we will be making some more dividend videos in the future. But AGNC is a real estate trust, and they pay out a really good, nice dividend yield of almost 9%, 8.93% per year. And this is a monthly paying dividend stock, so it's a beauty of holding shares of the stock. We're not really going to be playing options. If you want to, you could do a cash secured put at the current stock price, which is around $16. You won't receive too much credit. So you could do that if you want a $16 cash secured put August 20th, receive $34 of credit. Or you could just outright buy shares of the stock. For the long term, it's pretty good. It's a dividend paying stock, and the 1 year growth is actually pretty good as well. But as we mentioned earlier, it's a dividend paying stock, so there's not going to be much volatility. The main thing is holding shares of the stock and receiving that nice monthly dividend for the stock, monthly income right to your account every single month, which is pretty sweet. So they're reporting earnings on Monday after the market closes. So we will see what happens then. That's about it for this video. Huge earnings week and some strategies on how to play some of these stocks for earnings. Of course, if you are new here, please subscribe to the channel and comment down below what stocks you are looking for this week. Thanks for watching.